Nigeria has unveiled its 2025 budget proposal, allocating 47 trillion naira in spending. This ambitious budget is predicated on an oil price of $75 per barrel and a daily production target of 2 million barrels. The budget anticipates a deficit of 13.8 trillion naira, or 3.87% of estimated GDP. Additionally, it forecasts an exchange rate of 1,400 naira to the US dollar, a more optimistic projection than the current official rate, which of course hovers around 1,600 and 1,700. Now, joining me for more on this, I have with me Oladipo. Yes, I have Oladipo Ajayi, the head fixed income and forex, Chapel Hill Denham Securities, joining me for this. Hello, Oladipo. Thank you for joining me today.
Good morning, Professor. Thank you very much for having me on this morning.
All right, thank you so much. I also have with me Olusesan Okunade, chartered accountant and tax consultant. Thank you so much, Olusesan, for joining me today. All right, Mr. Olusesan, if you can hear me, this particular budget has a proposed total expenditure of 47.9 trillion naira. Now, that may be unprecedented in naira terms, but can we say the same when considered in dollar terms? Mr. Oladipo, let's have your thoughts on that.
Well, thank you very much, Petra, for that. And sincerely speaking, when you see the figure in naira, of course, it looks so big. But when you actually translate that to dollars, of course, it comes in line with the norm. If you remember, in 2023, our budget for 2023 was about 21.83 billion. And the exchange rate as at then was about 450 naira to $1. So that brings our budget in that year of 2023 to about $48 billion. So when you compare the $48 billion to what the government is looking at spending in 2025, of course, that is about $28.18 billion. So it tells you that the budget is just big in naira. But when you look at it in dollar terms, it's not something tangible. And if you look, you can also take it as far back as 2012. In 2012, our budget was about 4.4 trillion. Our exchange rate was around 150 naira to $1. So it brings our budget to about 29 billion. So when you look at that and compare it to what we are doing now, there has not been any substantial increase. Rather, it has been more like a decreased budget in dollar terms. And when you now want to compare it with the peers, look at our peers in African space. Of course, when you are talking about Nigeria in Africa, you also want to talk about South Africa. The budget for South Africa for the year 2024 was around $130 billion. The budget for Kenya for the year 2024 was about $31.1 billion. The budget for Egypt as 2024 was over $30 billion as well. And when you compare that to what we did last year, Nigeria did about $28.8 billion. So it means that what we are actually budgeting to spend on the number of people in Nigeria cannot be compared to what our other counterparts in Africa is doing. South Africa is doing about $130 billion for a population.
Well, Mr. Ajayi, we can go on and on that, but what's the implication of this really?
Well, the implication of this for Nigerians generally is that, firstly, we need to actually unpack what level of this budget you're actually going to capital expenditure. But because it's not about recurrence, it's about the capital expenditure aspect of this budget. And that's one of the key things we need to actually note as well. Another thing also is the fact that what is the budget deficit number? When you look at it, the budget deficit is about 13.5 trillion. And when you compare that, 30.8 trillion, when you compare that to the 9.18 trillion for last year, and it calls to question that it seems that 2025 is also going to be a very tough year for corporate companies. It means that the government will still crowd out the debt market in the year 2025. It also means that the cost of raising funds for the corporate organization will be very, very high in year 2025. And these are some of the things that this budget tells you. But when you look at it in terms of the value of the budget and the impact on Nigeria, I don't think it's big enough to actually
move the needle.
Impact when you compare to what other African countries are doing.
Right. I know there's no speaking with you without, going to the markets, the financial markets and all of those. Mr. Olusesan, I don't know if you can hear me, but if you can, I'd like us to take a look at some of the details we already have now. I mean, while crude oil is benchmarked at $75 per barrel and oil production at 2.06 million barrels, we know that the average production this year is around about 1.4 million barrels per day, and same goes for October figures according to OPEC. Now, do we have what it takes to ramp up production in 2025? And we're also hearing that, okay, in November we are doing 1.8. That is not OPEC figure anyway. So let me get your thoughts on this. Are we getting close? Do we have, enough? Do we have enough measures that will ensure that we ramp up production in 2025?
No, thank you very much, Perpetua. I want to state here that some of the projections being given by the government, I'm not one of them, but I feel it seems not realistic. My other colleague, I've actually spoken to some of this guy over there. I'm not saying anything. It's more of paperwork and projection than reality that you can speak to. So when we see the current market price of OPEC, we might sound a bit conservative because currently it's about $81 per barrel, and we are having a benchmark of saying it's 75. We might try as much as possible to be conservative in our revenue. But when it comes to the production, I doubt, and I'm not sounding pessimistic, because we still have this issue of crude oil theft that is very difficult to manage as we speak. And the measure being put in place does not actually allude to the fact that we might be increasing that range as far as that figure when it comes to 2025. But be that it may, it's a budget, but it speaks more volume that most corporate organizations, individuals, should tighten up their budget, because other parameters that we might be actually considering for this budget in 2025 does not seem favorable. My colleague has spoke to that while he was giving his analysis, that when you look at the dollar equivalent of this amount that we are calling 47 trillion, you discover that it's quite lower than what we had in 2024. And rather than you increasing your trend, to be able to develop some other aspect, you are reducing your quota because majority of the things that will actually be carried out is more import dependent. It depends majorly on foreign exchange. And until we address the issue of this volatility in our foreign exchange, we might continue to have this current hardship, and businesses might continue to struggle even to survive with the trend. It doesn't sound optimistic to me that we have light behind the tunnel with some of the parameters that have been spread out by the government.
Right, Mr. Okunade, you've brought us to the exchange rate conversation. I mean, we're saying an exchange rate of 1,400 as against an exchange rate that hovers around 1,617. And you also probably want to look at the GDP growth rate projected at 4.6. Do you think we have enough measures in place to ensure this appreciation both in the Naira and GDP growth? I'd like you to take this, Mr. Ajayi, especially because we're looking at some of the actions that the CBN is already taking in the markets to ensure that we have that stability.
Well, for a budget, estimations of 1,400 for the budget in 2025, I think is very conservative, and I'm very sure it's conservative enough because when you're budgeting revenue, it's very, very nice for you to be a bit conservative so that you know the budget revenue. And because the impact is at the end of the day, you find out that you don't have as much as the revenue you have projected. So it means that you will still need to borrow more. And that's exactly what it also did in 2024. If you understand that 2024, the budget for the benchmark for the budget was 750 naira, and you know that we did far above 750 naira. So that is what actually helped to augment the shortfall in the oil production that we actually budgeted, because we budgeted for about 1.7 million barrels per day, but an average of what we did this year was around 1.5 million barrels per day. So the 200 million barrels that you're losing, you're actually augmenting for it for the under budgeting or under projection on the exchange rate, which is actually good for the budget. And so when you look at for 2025, I think 1,400 is not so bad. Because what you are trying to do is that though we are at 1,600, but you feel that even if we come down as low as 1,400 in the year 2025, we'll still be in line with the budget expectations.
Do you see the Naira coming down? Because you just said something. You just said something about it, even if we come down to 1,004. Do you actually see the Naira coming down to 1,004 in 2025?
Well, like you said, we all know that the central bank has been very, very active in the market. Since the emergence of the new CBN governor, we've seen many of these policies that have been shown out. And for me, I think that these are more like the productive stage of some of those policies. We actually need to start expecting to start seeing the fruit coming next year. And one of the ways that I feel that is that we've seen a lot of reform. We have seen reform around the BDC. Of course, I expect by year 2025 that the central bank should put closure at that. So, and that will actually cater for what the volatility we are seeing in the parallel market and also in the official market also. We've seen, as we speak currently, the reserve is not of 40 billion. So it simply seems that we'll be seeing a lot of accretion into the reserve on the part of the central bank. But I think that central bank needs to now take it a notch further. And what they need to do currently is to start now supplying to the market. It's good enough for you to have a huge reserve so as to help your import cover. Your import cover. But the good, you're looking at the import cover, you also need to ensure that the market is liquid enough so as to give you the fair value of the currency. So I think that the central bank will be more active in the market so as to put the currency at a stable. So an estimate of 1,400, I think is not something that is totally out of place for us to actually get to in the year 2025.
All right, I want us to move this conversation further now. Let's look at the fiscal deficit already exceeding projections. That's when we look at the first half of 2024. We're talking 7.5% as against a projection of about 3.5%. Now, how can this government reconcile this with a 3.87% deficit target for 2025? Are we going to do another double? Because that's what is happening already for 2024. Mr. Ajayi.
Well, when you look at the budget deficit, like I have said something around this earlier on. And mind you, when they were doing those budgets, they said the budget deficit is about 3.5% of the projected GDP growth. And so it means that what they are actually factoring is the expectation after the implementation of those budgets. I don't think that is the best way to actually operate the budget. When you see a budget of the deficit of about 13.8 trillion, and you compare that to the 9.18 trillion that we did last year, that's like about 4.5 trillion bigger than what we did currently this year. And for this year, we saw what happened in the market. Eventually, I can tell you boldly that not much companies were in the market this year to actually raise capital. The guys that we saw in the market, they are basically the big guys like Dangote and MTN. We did see some of these small guys come to the market to raise capital. Even the Dangote, even the MTN guys that we saw this year, none of them were in the debt market to raise bonds. They were just doing more like a CP to raise short-term funds. So it's very difficult for most of these corporates to raise funds in the market in the year 2024. And when you now have an economy for 2025 where the budget deficit will be about 13.8 trillion, what comes to mind is that will it be good for most of these corporates to come to the market? Eventually, the answer is no. Because most people in the market would rather want to invest in government security than investing in corporate security. Because one thing about corporate security, it has additional credit risk. And mostly, investors also want to actually ensure that they actually operate safety. So it means that year 2025 will be very, very much difficult for most corporates to actually come to the market to raise capital. And I think the only caveat to this is if the body language of the monetary policy guys changed, if the monetary policy guide changed from an extreme hawkish position to maybe more like a dovish position, what that will mean to us is that we'll see drop in the rate of interest rates in the market. And that could actually...
All right, Mr. Ajayi, just before I move on to Mr. Olusesan Okunade, I mean, I'm looking at something now. You're talking about, the domestic markets and how the federal government has been able to, crowd out the private sector. But now the government is announcing, $1.7 billion that it's hoping to raise through the issuance of Euro bonds. And we're also seeing another $500 million for Sukuk bond. Do you think that offers any respite, for the private sector, saying that, well, the government is going external now.
Yeah, the 1.7 million that you're talking about.
$1.7 billion.
Yeah, the 1.7 billion and the $500 million is for the year 2024. So it means that it's not part of the budget for the year 2025. Even let's assume that.
Yeah, of course, we're talking about 2024 now and how, you know, the private sector has been crowded out. That's why I'm asking that question. Does this offer any respite?
No, I don't think it's offering any respite. It's just a month to the end of the year. So how many of these guys can still come to the market? Now, you know how difficult for you to actually come to the market. You have to engage an investment banker to actually work on the project. You have to go through SEC. And at the same time, after it has been approved by SEC, is at that point that you can actually come to the market. So I think it's late already. It's not bringing any level of respite to private companies for this year. So the Eurobond is not bringing any better thing on the table for private companies because the year 2024 is gone already.
All right, we'll come back to that. Mr. Okunade, we have two long-standing issues here, really. Nigeria is unable to generate needed revenue, and the debt stock has ballooned. We're talking about 130 trillion naira, coupled with the announced deficit and borrowings. Do you think the country still has enough headroom for these debts? I mean, how sustainable is this?
Yeah, Perpetua, I must say categorically that this debt is really not sustainable. And a lot of us have said it that until we start looking internally to some of the things that we are doing, how much of, a lot of people, we can come to talk of economic terms, but what other areas are we looking at? How much have we, moved in the area of security? Perpetua, an average businessman need a secure environment for his businesses to grow. Don't forget that we are interdependent on each other. A lot of things are actually moved from some part of the country to another. What's the security guarantee that if, as a business person, if you are able to put those things out, you will get it. If we must grow and reduce some of these borrowing out, we must start concentrating on how we can grow. Just like Mr. Oladipo said, look at an average organization within the country that is struggling to even raise funds. Don't forget that one of the mix of funding continuity as a nation. So I feel there are other parameters that the government needs to actually look into critically, aside the monetary and the fiscal policy, in terms of security, in terms of domesticating and reducing the cost of governance, prioritizing some of the things that can actually bring development into the area. A lot of things are actually being expended on foreign exchange, putting so much pressure on things that we can even produce locally, and that on its own cannot give an inroad into the growth of any economy. So some of the indices that we have shows that 2025 might be a very difficult year for most organizations because having access to funds will be pretty difficult. And then when the organizations are not growing, how do you expect government to generate revenue in terms of taxes, which is the major legit area of revenue generation? You will only be moving around the same set of people who are actually struggling to survive. And I think that's an area they need to focus on.
All right, and I was going to ask you something, but I like that you brought us there. I mean, talking about revenue generation, we've seen the government take certain actions, though implementation has been slow in some cases, whether it is the tax reform or some of the reforms we're beginning to see in the oil and gas sector. How quickly can these translate into more revenue for the nation? You don't even sound optimistic anyway, Mr. Olusesan.
Yeah, well, not that one is not optimistic, but you discover that a lot of policies that are actually being shut down by the policy makers when it comes to implementation, because there are no proper systems to monitor some of these things. You discover that a lot of it fails by the wayside, and it looks as if we are not going a way through. Just look at the area of tax reforms. A tax committee, fiscal policy committee was formed, and they're just bringing it out without several people, studying it. We started winning emotions not critically studying what it's all about. And if you critically examine that reform, you discover that majority of the states that are actually agitating that this should not exist will be in their favor, because we've seen a situation where in the tax reform, we are reducing some of the things that should go to the federal government, concentrate more on the state so that you can get more to the grassroots. But a lot of them are not seeing it in that area because there seems to be a slight change of sharing formula. And this is to actually put, more work on the states to generate more so that you can develop your state, bring more creativity and innovation. But because we rely so on the money that comes from FAC and the likes, a lot of people are actually counterproductive. If we don't allow change to actually, come into place in some of the things that we are doing, we might remain the same way. Let's change a chance with some of the policies that we have and be able to have a system that monitors things so that if we are deviating, we might be able to put some checks in place for quick resolution.
Thank you. So, Mr. Oladipo, let me close with you on this. We're looking at this $2.2 billion, which, of course, the federal government wants to get. Do you have any note of caution? And also, do you think the market is favorable for Nigeria looking at the Eurobond space?
Well, Perpetua, Nigeria government has waited for this time. And if you remember at the beginning of the year, they've actually mentioned about actually going to international markets to actually raise funds. And but what they did was they waited until when the U.S. Fed became dovish. And between the last 3 months, we've seen the U.S. Fed did about 75 basis point rate cut, and we are still expecting another 25 basis point before the end of the year. So it simply means that the market is ripe for Nigeria to actually enter. And that's one of the reasons why the government wants to take the advantage to actually go in within this short window before the end of the year. And I think for me, it's actually a good decision because as we speak currently, the problem in the current country is about FX problem. We've not been able to have enough FX liquidity to stabilize the market. A lot of policies have been put in place that would actually yield good results. But when you don't see the stability of FX, of course, it will be counterproductive to some of those policies. And that's one of the reasons why the government is looking aggressively to find a way to actually stabilize currency. And I think that's one of the reasons why they are towing the line of actually going into the Eurobond market to raise about $1.7 billion from that market. And the end goal is that that will help to actually help cushion the effect of the level of volatility we are seeing in the FX market and give the central bank more firepower to actually meet FX need of Nigerians and also the productive economy of the country. So I think it's a good one, and I think the window is right for them to go in.
Well, thank you so much, Oladipo Ajayi, Head Fixed Income and Forex Chapel Hill Denham. Thank you for your thoughts on the show today.